Hi, Jonathan York, Bay Financial Partners, looking at investment markets. A pretty big week for Trump. He's come up with a couple of major trade deals. Now, first there was a trade deal with Japan, which came in with tariffs at 15%. That opens up the Japanese market to apparently to exports from the US from cars and also rice. Then obviously the big one was the EU trade deal, which again, tariffs of 15%. As yet, the details are a little bit light there, and sort of waiting to see exactly what's covered and what's not. Apparently, it looks like wine and spirits aren't covered in there yet, so it'll just be interesting to see how that sort of plays out. But also as well, apparently the EU has pledged to purchase $750 billion worth of energy from the US over the next sort of 3 years. Now, while that sounds good, and will certainly appease Trump's base because look, he's getting trade deals done, he's making America great, etc., etc. When it comes down to it, $750 billion worth of energy. Firstly, what type of energy? Where's it coming from? But also as well, that is twice as much energy as the US exports in 1 year. So where they're going to find that extra energy from, and is it going to be the detriment of domestic demand? Because basic laws of economics, supply and demand, if you've got more demand than supply, prices go up. So certainly on the face of it, it looks pretty good, and Trump is lauding it that the best deal ever, biggest deal in history, etc. But when it actually comes down to it, and you look at the actual sort of mechanics of it, potentially there are more questions than answers. Now also we've got the Fed meeting this week as well, and Trump's come out and tried to put further pressure, saying he feels that the Fed is ready to cut interest rates. What is also quite interesting as well is the US dollar is weakening out there. It's down around 10% against the major currencies, which is one of the worst years since the early 70s. Some pretty big earnings this week as well. We've got Meta, Apple, and Amazon. What was interesting with General Motors earnings last week was they took about $1 billion hit in that quarter because of tariffs. So again, for all the rhetoric from Trump and his administration that the countries that are exporting are paying the tariffs, it's actually the US, either consumer or the US companies that are paying the tariffs. And as if to hammer home that point, a Republican has put forward a bill in Congress that will actually give a tariff rebate back to some US consumers. And further evidence as well of Trump's sort of basic sort of lack of understanding of basic maths. He's come out and said that pharmaceutical prices, drug prices, will come down by not 40 or 50 or 60%, they'll come down by 1,000%. Which clearly just demonstrates a lack of understanding for basic math. Now, the EU deal is pretty important. That accounts for around over 30% of global trade. And on the back of that, US interest rates have certainly nudged down. So the 10-year is 432, the 2-year is 388, and that all-important 30-year is 486. They've come down around 6 to 8 basis points over the course of the week, and so it's really on the back of that EU trade deal. But Trump has also come out and brought forward the deadline with Russia to come up with a ceasefire with Ukraine. That's now down to a couple of weeks. Though quite what he's going to do if Putin doesn't come up with a ceasefire is yet to be decided. Now, on the back of the EU trade deal, oil has spiked back up now just below $70. It's 69.30 and change. So potentially that has some inflation implications out there, and that won't please the Fed in its meeting this week. Now in the UK, Trump has been visiting Scotland, playing golf a couple of times, which again was sort of quite interesting out there, but also held a couple of meetings as well. Although what was quite evident was that there was quite a bit of protest to him being in the UK. Now obviously the big news for the EU is that trade deal, let's say 15% tariffs, which was a little bit more than the sort of 10% they were sort of hoping for, but obviously less than the sort of 25-30% that potentially was in place come August the 1st. But as discussed, the actual details are pretty light at the present, and it's just going to be very interesting to see how it all sort of plays out. Now in Australia, it's quite interesting. The Chinese have come up with a big new hydro plant in Tibet, and the scale of this really is pretty massive. We're looking at 800,000 tonnes of steel, 70,000 tonnes of copper, and over 6 million cubic metres of concrete. So that potentially should be good for the Australian economy, and potentially as well, with inflation under control, looking for the RBA to cut interest rates in August, which will give the Australian economy a further little boost. As discussed as well, the Australian economy is getting a pretty reasonable boost from the British Lions rugby tour out there. They brought around 45,000 fans travelling through Australia. And certainly Brisbane and Melbourne have had a really, pretty big sort of boost to their local economy, and the final match is in Sydney this weekend. With the two matches so far, it looks like about $120 million put into the local economies. Now here in New Zealand, waiting for the next CPI data. That's expected to come in around sort of 2.3, 2.4, which would be, within the Reserve Bank's bands, and potentially still looking for a rate cut in August. I've certainly seen quite a few mortgages obviously being refinanced out there at substantially lower levels. That's helping put more disposable income out there, which potentially can be spent in the economy. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.